Let's take a look at some charts and information on Dash for BraveNewCoin. So Dash is a hybrid proof of work, proof of stake coin. Lots of interesting fundamentals to look at there. It has optional privacy, which for the most part is easily traced by various on-chain analyst companies. So it's not really an incredibly useful function, but they do have that limited functionality nonetheless. Let's start with the proof of work metrics. Hash rate has waxed and waned kind of over the past few years, certainly up from 2017, obviously, but in general, with these mixed hybrid chains, you typically don't see explosions in hash rate over a long period of time. The CRED, kind of similar. Hybrid, proof of work, proof of stake, has a treasury, just like Dash. And if we look at the ASICs on this algorithm, there's actually a new ASIC coming in October. Believe it or not, the first one since 2019, November 2019. By the calcs, it looks to be incredibly profitable at 4 cents per kilowatt hour. Most of these older ASICs are no longer profitable at all at that price for electricity. Probably not even existent anymore. They're probably all in a scrap heap somewhere, if I had to guess. Certainly anything pre-2018 is probably no longer operational. But with the new ASIC coming in October, that could potentially mean hash rate having another run like it did from Jan 2019 to October 2020. This could be the early signals of a bounce even here as to why that's happening because of the new ASIC coming in October, a month from now. Dash has masternodes as part of the proof of stake aspect. They require 1,000 Dash to lock up, so it's a good metric to watch to see if the hodlers are bullish or bearish on Dash. For the most part, masternodes haven't really moved since 2018, basically hovering around 4,500 to 4,800. So not a lot of activity there. Even if we zoom in a little bit, in general, there's just not too much volatility here. You know, we're not going from 4,500 to 5,500, which would be super bullish. We're not going from 4,500 to 3,500, which would be incredibly bearish because it would probably represent those hodlers selling. The adjusted reward after inflation is around 0.5%. So to run a masternode doesn't really make too much sense. Probably for most people, they'd rather just participate in DeFi on some chain with better APYs than 5%, 6% before inflation, 0.5% after inflation. I mean, you can lend a Dash for 5%. So depending on how much of a community member you want to be for this stuff, being a masternode participant isn't really for most people. Looking at inflation rates for a bunch of different coins, privacy coins, proof of work coins, BTC Monero down there at sub 2%, Dash in the middle at 5.2%, and then Zcash at 11%. So it's really a tough ask, I think, for hodlers to want to hodl Dash over BTC or Monero. Now, you're not getting a yield on that, but you're also not getting inflated to death at 5% plus. Even ETH has 4.2% base inflation with deflationary possibilities with the burning. LTC Doge down there at 3.8 as well. So I think the older these coins are, the less sort of use and functionality they have. More people point to stuff like inflation and just look at the numbers, you know, what else do they have to do? Looking at transaction counts in the line here, mean transaction sizes in the fill. As transaction counts are falling, average transaction count or sizes are rising, which makes sense. You're seeing fewer microtransactions. Transaction counts have fallen from 50,000 to 10,000, basically multi-year lows. It certainly doesn't look good from a fundamental perspective there. Private transactions per day around the 80 to 90, so not really too many. Mixing transactions are sort of stable and steady as well. NVT, inverse metric of economic utility relative to price, continues to fall to all-time lows, which is interesting. So if this metric is correct, it tells you this is becoming an increasingly better buy, but you have to wonder how much does mixing play a role in this. To see on-chain transaction sizes increase like this is potentially a mixing component as well. But if this is correct, it says Dash is a great buy here, which I don't necessarily agree with, but it is what it is. Active addresses down from 112,000 to 49,000. Again, multi-year lows. You don't want to see multi-year lows on-chain activity if you're bullish. You just don't. So either there was some service or automated function that was happening and it's no longer happening, it looks like, or stuff's going to some layer 2 that I'm unaware of. I don't know, but to see on-chain stats decline so dramatically, certainly bearish. Now, if hash rate picks up because of the new ASIC, all the on-chain stats are probably going to pick up. So that would definitely be something else to watch for in that regard. Price versus MVRV, which is more of a direct measure of economic utility versus price. For most coins, they top out around a 2x multiple on MVRV. Dash has topped out around 4 twice. Most recently, it topped out around 2 at that 380, 390 high. Currently, MVRV is around 1.3. So it looks like a buy zone is anything below 0.9. It's gotten as low as 0.3, 0.2 in December 2019. And the sell zone is anything above 2. So if this thing does have another run over the next 3 months, I would definitely be looking to this. I'd be looking at the on-chain numbers. What do they look like? Do they support increasing prices? That sort of thing. Dashcoin Google Trends had a nice little peak here in early 2021 and then have declined pretty much along with everything else that isn't Solana on Google Trends. So again, if throughout Q4 this stuff picks up a little bit along with the ASIC release, then I would look to this as well for a sign that the bullish trend is healthy and people are speculating on Dash again. Moving on to technicals on the daily chart, 5200 cross, VPVR, yearly pivots, and RSI, along with volume down here. This is on Poloniex, so not a lot of volume these days on Poloniex, but most of the VPVR is acting as support here at 200, at 100, at 50, anything in that zone. So this doesn't look at threat for new lower lows beyond what we saw in May. 5200 cross is bullish, and it's intertwined in between all of these yearly pivots here. If Q4 is bullish along with everything else, I certainly like all-time high retest on the USD pair within the next 3 months. Trend metrics look good. If we look at the half-year MA and the 1-year MA multipliers, neither of them fit perfectly. And most recently, Dash didn't really reach for either of these multiples. It reached for the midline. So maybe that's the best you could hope for in the next run up. Currently around 500 on the daily 365 MA and currently around 660 on the half-year MA. So those will be the levels to watch. Those will move up over time if price moves up over time. But as we sit today, 500 and 660, somewhere in there is probably a good sell zone based on the midline. In 2017, 2018, price just cruised along here. We saw a lot of alts do this. Monero is another one that did this. I don't know if alts that don't have DeFi, that don't have NFTs, that don't have DEXs can necessarily do that going forward. There's just newer, better, faster, stronger chains that do more stuff. So if that changes for Dash, then that'll change price possibilities. But right now it looks like 500 to 660. 666, it's a good number to top out on. On the daily cloud, Dash is in the cloud. It was working on a edge-to-edge trade from 180 to 280, 290. Almost reached the target. Now it's M double topping and doesn't look so hot. But if you're bullish, you want to see this thing eventually above the cloud. If you're bearish, you want to see this thing below the cloud. Right now, it's more of an indeterminate trade. If you're still in the active long, your stop loss is probably 200. Anything below 200 on a daily close, it's probably good to call it at that point in time. So this is still pretty neutral overall on that outlook. And on the Dash BTC pair, zoomed way out on the 3-day, VPVR cloud, the 200-day moving average, 200 period moving average, in this case, the 600-day moving average. Dash previously took 2 years to break out of any sort of pattern to the upside, consolidated for a year, and then has done nothing but break down ever since. So any moves to the upside will probably be very well telegraphed ahead of time because you'll probably see a year of consolidation. So maybe 2022 is Dash's year, but still this does not sit bullish in any regard. No patterns here. Maybe a W forming, maybe an ascending triangle forming, but this has got months left before any decision needs to be made here. If anything, I would just watch this 3-day 200 moving average, and even just 0.1 is a good level based on psychological resistance as well as volume resistance here on Poloniex. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techme Capital and Enzyme.finance, non-custodial portfolio management tool, where you can see everything including AUM, performance, allocations, all the yield plays I'm making, and all the trades I make at the bottom as well. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.